Hello everyone, it is Canadian Futures Trader here. It is April 2021, and in this video we're going to be going over LeeLoo Trading, and specifically their trailing drawdown. I'm going to try my best to explain it and also give you some tips on how to manage it. So let's get started. Actually, before we get started, if you're new here, be sure to subscribe. Check out some of my other videos. I basically kind of go through the different trader evaluation programs. I've had some success passing some of them, LeeLoo included, and I try to give back by creating some educational content. So first we're going to start with just going over what is a standard trailing drawdown, so not LeeLoo specific. And I apologize, some of the graphics are kind of grainy. I took an image that is from TopStep, quite honestly, just because it worked well for drawing on, and then I drew my own versions to help explain, so you're going to see this throughout the presentation. So hopefully you can see my mouse. So there's no account balance numbers, but account balance would be on the left, time would be on the bottom, number of days traded. So a traditional trailing drawdown, one way, I was trying to think of how to explain this to somebody, because sometimes I know it can get confusing. Think of it this way: if you were walking down a road and you had a rope behind you and you were dragging something behind you and it was 3,000, let's call it, inches away from you. Well, every time you take a step, whatever it is that you're dragging would be pulled a step as well. But if you were to turn around and walk towards it, it would stop moving and you would just close the distance in on it. But if you then turned around and start walking away from it, after you bring up the slack, it would continue to follow you. That's kind of what a trailing drawdown is. So you start with, I'm going to use $100,000 as an example. You start with a $100,000 balance when you start a trading evaluation. Let's say you have a $3,000 trailing drawdown. That's pretty typical for a $1,000 account. So this would be your $1,000 drawdown down here. Every time you make profit, it is dragged up. It's like that rope. It's going to pull it up. It's going to pull it up. So day two, you make more profit, you pull the trailing drawdown up. You start losing money, it's like you're walking back towards the thing you're dragging. It doesn't move, but you start closing the distance on it. You can't pass this line or you violate the rule. Now, this is an example of a traditional trailing drawdown. It typically stops when it gets to the value that is the starting value of your account. So there's a $3,000 gap. Once you've got it up to $100,000 in this example, it will stop. And then basically you are in the clear. As long as you stay above this level, everything above is all yours. So if you were to, like, you could lose all of this on day 7, day 8, whatever, and you would still not violate a rule. Now, let's move on to LeeLoo. Now, and again, I apologize. 1, it's grainy. 2, it's not the nicest looking graph. Don't worry, some of the other ones are a little bit nicer. There's a couple things with LeeLoo. So the first thing is their trailing drawdown does not stop, and that's something you need to understand. So same example, $1,000 account or $100,000 account, $3,000 drawdown. You start making profit, it's dragged up. If you lose money, it just stays stagnant. But as you start making more and more money, it moves up and it does not stop at the initial balance. So even though there's no numbers attached here, we said this was 100,000. Maybe this is like 300,000, 400,000. It's going to continue to trail. If you have a losing day, though, it doesn't trail, it just stays the same. But if you were to lose more than 3,000, you would violate this rule. So that's kind of what I demonstrated here. You go up, 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 down, up, down. This day, though, you've dragged it up this far. You hit this, you violated a rule. So really, there was no need for this part, quite honestly, because at this point, you would have busted. So I always recommend with LeeLoo, you connect through Rithmic, RTrader Pro. I took this picture right from LeeLoo's website. This auto liquidate threshold value is your trailing drawdown. It is updated continually, even when you're in a trade. So, they say it themselves, always keep an eye on this number. Basically what I do is I have a general sense of where I'm at relative to my drawdown, and then I'll do a trade. I'll just flip over to this and double check it again. If I have a small trade, I make 100, lose 100, I might not check it. But if I have a big trade, I'd always go and check this just to make sure I know where I'm at relative to the drawdown. Now, hopefully that makes sense. So knowing that it will trail you indefinitely, basically. Now, this is all through the evaluation phase. Later in the presentation, I'm going to show you what happens in the funded phase. The rules are better in the funded phase, I will say that, but there's also, depends on which account you choose. So the second thing with LeeLoo's trailing drawdown is it's not just based on your closed P&L, it's based on your open P&L. So let me explain, and I wrote this one out. Again, hopefully this makes sense. And again, if anything doesn't make sense, or you have any questions, or you have a specific example like that you kind of want to clarify, either leave a comment or send me an email, and I'll do my best to explain it. So let's say you're in a trade, and while this trade is open, it moves up to where you could take $2,000 in profit. A really good trade. Say this is your very first trade. It's trade number one. You have a $100,000 account. You get in on some NQ or whatnot. It just fires up to 2,000, where you could have 2,000 in profit. You set a stop loss at 1,500 in profit. You're basically going to lock in 1,500 just in case it continues to run. You want to give it a bit of space. This is exactly how I trade, by the way. If you've watched any of my more recent sort of trading videos, that's what I do with NQ. I kind of trail it manually with a stop. So let's say it turns around, comes down, hits your stop, but you've made 1,500. So feeling pretty good about that. What you have to realize is your drawdown is based on the high of 2,000. It's not based on the 1,500. It's based on the high. Your actual profit will be based on 1,500. The drawdown will be based on the 2,000. So here's how the numbers kind of play out. You had a $100,000 starting balance. You got 1,500, and we're ignoring commissions and everything else, of course. You had 1,500 in profit. So your balance right now is 101,500. Feeling pretty good. You're a quarter of the way to the goal of 6,000 in profit. Your trailing drawdown started at 97,000, right? $3,000 trailing drawdown. It got pulled up by 2,000. That was the high. So your trailing drawdown is currently at $99,000. And if you logged into our trader and looked at that, this is what you would see. So where you're at is you have 101,500 balance. Your drawdown value, like your kind of max, like, or sort of the number that you get, the lowest number you could get to is 99K. So you effectively only have 2,500 in drawdown available for your next trade. Now, one thing I want to emphasize as well is it's not going to continue to trail until you get to 3,000 again. So I didn't write out an example, but say your next trade is a $200 winner. Well, now you have 2,700 in buffer. It's not like you've permanently diminished your trailing drawdown. So it will build up again to 3,000 as you get more profitable trades. So this is an extreme example. This actually happened to me. I wish I could say I made this up just to be dramatic, but this literally happened to me last year at one point. All I could do was laugh. It was almost unbelievable. I was like, you cannot be serious. I had just signed up for LeeLoo. It wasn't my first time through it, but so I was well aware of the rule. So it wasn't so much that I was oblivious to the rule, but it still was fairly just to give you an extreme example that both happened to me and really kind of highlights how this can go. So my very first trade, legitimately, I signed up, etc. It was an evening. I do like trading in the evening sometimes. Ultra Bond, if you follow it at all, the bonds in general are a slow-moving product. In the evenings, they can be very, very slow. You can go minutes without even a tick moving. It was one of those evenings for about an hour and a half. The Ultra Bond had traded in a 3 to 4 tick range. I'm thinking I'm being pretty smart. I went in the full clip, 12 lots. I'm just trying to scalp a tick, one tick. So to put that in perspective, 12 lots of the Ultra Bond, it's roughly $30 a tick. It's like 31.20. It's either 25 or 75. But anyways, let's just call it $30 a tick. So it'll be a quick 360 if I can just get a one tick winner. Pretty much immediately after I went in, the price spiked in my favor by 7 ticks. Now, so basically what happens, again, Ultra Bond is very thin product, especially in the evenings. There might only be 2 or 3 lots at any given price level of limit orders. So if somebody comes in and hits that with, a 20 or 30 lot market order, it will spike it. So shame on me, I didn't have any take profits or anything set or trailing stops. So it spiked up 7 ticks, could profit 2,500. But guess what? It immediately spiked right down. You get algos kicking in, basically is what happened. So it spiked up and then spiked right back down. Pretty much before I even knew what happened, all I see is this flash of flurry of activity on my screen. I just flat the trade. I get out. I'm just I have no idea what's happening right now. I don't know if it's going to continue to spike down, whatnot. I just hit flat. I'm out of the trade. I pretty much got out with no profit or loss. The price legitimately just came back to where it had been seconds ago. But guess what? Now I only had about 400 left in drawdown after one trade, because my drawdown was based on being dragged up 2,500. I flatted back at the original price, so I had zero actual locked-in profit, but my drawdown reflected that it had moved up 2,500. So shame on me, and we're going to get to some ways you can prevent this from happening. So I seriously had to laugh. I was like, I cannot believe this. I've been in this account for less than half an hour, and I'm already at a huge disadvantage. So the numbers here count: 100k start, 100k end, pretty much. I can't remember the exact number, but I was pretty much just back where I started, except now my trailing drawdown, which was 97, was now 99,500. So I basically have a $500 buffer left. I did end up busting that night. I think it was a combination of, one, that tilted me, and two, I basically gave it one more trade. I was like, you know what, I'll give this a go, one more trade. If it's a loser, forget it. I'm out. I'm just gonna reset this account and write this off, and that's what happened. So we'll get to ways to prevent this, but that's, I mean, and like I said, this is an extreme example. Unfortunately, it's an extreme example that was very much a reality. So the evaluation phase, managing your drawdown. So I drew this graph again. I apologize for the poor graphics and my poor drawing abilities. Don't worry, some of the future graphs I have in the presentation, I actually use just the straight line to draw. So again, keep in mind, this is basically how things might go in a typical account. You know, you have your $3,000 drawdown, you make some profits, so you drag it up. You have a small loser, you drag it up some more, another loser, as long as you can stay ahead of the curve. Now, remember, I mentioned that, for example, if your drawdown, let's say it was 3,000, but then you have a loser, and now you're close to it. So, for example, right here, you know, you have a big winner, then you almost touch on it. So let's say there's $300 in space here, you know, whatever the difference is between where you're at with your account and where the drawdown is. It's not going to continue up until you get to $3,000 again. So that's why I have this line flat, because you're just kind of bouncing around in here, you know, 1,000, 2,000, whatever these are. Then once you start having more success, you start dragging it up again. So just keep that in mind. You're going to have to stay ahead of it. And again, I mentioned it already, but we'll get to some techniques on how you can do that. All right, so now let's get to some tips on how to manage that drawdown on your open P&L. So I have two kind of recommendations here. I think these will help a lot of people. There are other ways to go about managing it as well, but these are just to give you some ideas, especially if you're kind of new to this concept of the drawdown on the open P&L. One, set a take profit on every single trade. So I mentioned here, I might use $1,000 plus or minus. So in that bond example that I just gave, for example, if I'd set a take profit at $1,000, I would have hit it. I would have been out at $1,000. I would have locked in $1,000 profit, and I still would have had a $3,000 drawdown. So you might give up some profit. Like in that example, the price shot up to 2,500 and then came right back down. Well, yeah, I missed out on 2,500, but guess what? I would have locked in 1,000. Not too bad. But you have to put things into perspective too. When your goal is 6,000, if you make $1,000 on a single trade, not a bad day. So set a take profit. Maybe it's 500. Maybe it's it all depends on what you're trading, how many lots you're trading, etc. That way, as I mentioned here, if the price spikes, you get taken out 1,000 profit. It's not so bad. Like, it's not a bad situation. You're locking in 1,000 profit. Your drawdown isn't impacted. It drags up 1,000, but you also made 1,000, so you're totally fine there. And at worst case scenario, say the price spiked to 900, so it doesn't hit your take profit, and then it falls back down. Your drawdown got dragged up 900, but 900 isn't the end of the world. You still have some decent buffer to work with. And again, this is where you can decide what's appropriate for you. Maybe 500 is appropriate. Another option, or you can do both of these, is to set a trailing stop. So, for example, again, going back to that bond example I just gave where it spiked up 2,500, it came right back down. If I'd had a trailing stop of, say, 3 ticks, I mean, remember, the bonds don't move a lot of action. So this spiked up 7, came back down. If I had a 3-tick trailing stop, that trailing stop would have followed it all the way up as fast as it moved, and it would have hit it on the way down, but I would have locked in several ticks of profit. So you kind of see me, again, just reflecting, if you've watched any of my NQ trades, I'm kind of manually doing this. Sometimes I'll set the take profit, but I definitely kind of trail it with a stop loss. Sometimes I have a like an automatic trailing stop loss, and sometimes I'm just manually managing my stop loss. But I'm for sure locking in some profit. I'm not just letting it gonna take off and come back down. So keep a pretty, usually about a 10 tick stop on the NQ, but that was only with a few lots. Anyways, nonetheless, point being is you put a trailing stop loss on it. You know that even if it takes off in like a second and comes back down, your stop loss will fire up with it and grab most of that profit. So hopefully that makes sense. Okay guys, so now that either might be confusing, it might be frustrating. I know the LeeLoo rules on drawdowns are probably the most difficult out of all the different evaluations. That's kind of like one of the negative things about LeeLoo, if you will. Before I kind of dive into the slide, I will say once you kind of figure them out and how to manage them, they aren't so bad. So I'll just leave it at that. LeeLoo funded accounts. So they call them performance accounts, funded account, whatever you want to call it. So you have two options. So first I just kind of want to explain the options because how the drawdown works in each is different, of course. So LeeLoo definitely is on the slightly confusing side when it comes to all their options. But once you wrap your head around them, it's fine. But at first it can be confusing. So when you get funded and like you pass, you get funded, you have to choose. You want the investor account or the accelerator account. I choose the accelerator. I don't want this video to be all about the pros and cons of the different investor or performance account options, but I would say I think the accelerator probably fits most people. So investor account though, it has a 3K drawdown. It works for much the same, but it trails like a normal drawdown. So it's like that very first slide that I showed. When your drawdown hits 100,100, they have it just be $100 over your starting balance. It never trails again. So it's very much like that first slide. It'll trail your first 3,000 and then it just stops. And then everything you make up and above that, you know, you're at 7,000 profit, 10,000 profit, 20,000 profit. That's actually how much buffer you have between, you know, if you're at 120K, you have 20K less 100. It's, you know, 19,900 in buffer. The accelerator, which I'm in, and works slightly, of course, this is a slightly more confusing one. So there's two phases to the accelerator funded account. Phase one is you get a 625 fixed drawdown. So it's not going to trail. There's going to be no trailing in this example. You have a 100K account. Your drawdown is 99,375. Every dollar you make above 100K is $1 in additional drawdown that you have, because this is not going to change. And I have a little graph drawn out in a second. Phase two, so once you get to 2,000 in profit, so you get to 102K balance, you move to phase two. Phase two, your drawdown is moved from this number, 99,375, to 100, same as up here. And then this functions the same as this. There's no trail after that. Your balance, your drawdown like number is $100,100. Anything you make up and above that is buffer between you and busting. So again, one of my fancy drawings. This is the investor account. Again, I don't want to spend too much time on it because I really don't think it's the popular choice. But you know, let's just say this is again your profit graph and your trailing drawdown. Again, this is very much like that first graph, just a little bit more fancily drawn. 1,000, 2,000, 3,000 in profit, 1,000, 2,000, 3,000 a loss. You start with a 3K drawdown. You have a profitable day, it moves up. You have another profitable day, it moves up. This is up. You have a losing day, it stays flat. You have a big winning day, it gets dragged up. So at this point, you're 3K in profit, 3,000 in, you know, you went from 97 to 100. So it's technically 100,100, and it just stays there. So everything, so now you can just play up here. As long as you never hit 100,100, you're in the clear. And hopefully this is everybody's graph. You just take off with profit, and this will just stay the same. This stays the same. So this will be up here, and there you go. LeeLoo funded accelerator account. The choice I made, the choice I somewhat recommend. Phase one. So remember, there was two phases. You start here. So you start with a funded $100,000 account. You have a $2,000 goal. You have a 625 drawdown. This is static. Remember, this does not trail. Static drawdown. As long as you don't come down here and touch this, you can spend as long as you want until you hit 200,000, and then you will move into phase number two. So that's what happened here. Like profitable day, small losing day, big winning day, huge losing day, but you didn't touch this. You're just kind of below the 100,000. Then big, huge winning day, you hit the 200,000. You stop trading, you email support, you said, hey, I just finished phase one. Within a day, they email you back and say, congrats, you're ready to go on phase two. How does phase two work? You keep the first 2,000. 2,000 is still yours. So you start with 102, like your account doesn't change, like it's still your account. Let's say it wasn't exactly 102, it was 102 and $300, like is where you ended up closing out. You would just continue with the same account, so you would still have $102, $300, just so you know. What they basically do is move your static drawdown from the 99,375 to 100, 100. And that's it. Everything above, as long as you stay above that number, it's all yours. So at this point, it's like the investor account. So, once you reach that. So here you go. You play around, have a bit of a losing day, no problem. Just don't touch this, and then bam, you're off to the races. Start making profit, and that is denoted by the dollar sign. I encourage you, once you make some profit, guys, do something nice. Give your parents a present. Just my 2 cents. Do something nice for the people who were around you on those losing days when you maybe weren't the nicest person. Okay, so guys, some tips for the evaluation phase, and then I'll give you some tips for the funded phase. So, and I think there's a lot of value in these. Not to toot my own horn, but I think you can really a lot of people worry about that trailing drawdown, and I think your worries are easily mitigated by doing a few things. Monitor your auto liquidate in Rithmic after every trade. I pretty much do it unless it's like a small amount, but just check it. Just make sure you know where you're at relative to the drawdown. Set your own stop losses. So I did not cover that in this video. I have an entire video going over how you do that in Rithmic. So I put a link down below. You can see that video. You can set your own stop loss. So let's say it's day one. You have a $100,000 account. You have a $3,000 trailing drawdown. You can set your own stop loss at $1,000. What will happen is if you hit it, Rithmic will kick you out, but you obviously don't violate a rule. It's just your own rule. Now, with that, you can also go back in and change that if you did really want to keep trading, but it will at least kick you out. So watch that video if you want to learn how to set your own stop loss. I do it after each day, so I might set, for example, I'll just give a real world example. I'm currently just finished day 2 of LeeLoo Climb, and I'm at roughly 1,800 in profit, so I will set a stop loss at 1,200. So if my balance falls on day number 3, if I fall below 1,200, Rithmic will just kick me out. I know that I'm still good. I'm well above my LeeLoo trailing drawdown, but Rithmic will kick me out. It kind of gives me a pause. So also just keep in mind that the drawdown trails indefinitely. I think some people just don't understand how it works. They forget that it's trailing. Just remember that it's trailing, and it doesn't stop at break even. When you get to 5,000 in profit, you still have a drawdown number that at this point will be above $100,000. So remember that the drawdown trails the open P&L. So we went over all the ways, and hopefully it's very clear now. But if you have a trade that goes up a lot and comes down, and you only realize some of that profit, the drawdown is going to be reflective of the entire amount that you could have gotten. And then I showed you those 2 situations where you can set a trailing stop loss and or set a take profit. The take profit is very powerful. Just set, it doesn't even have to be necessarily a number that you are set on getting to or anything like that. Just set $1,000 or a $1,500 take profit. If there's some wild spike, you'll capture that profit. It's a good day, and guess what? It'll help out your drawdown situation. Okay, so getting to the funded accounts, and we'll go over the Accelerator account first, then I'll give you some for the investor account as well. So you have a 625 drawdown to start with. You get funded, you go through the whole thing, you're ready to go. My advice is just tiptoe away from it. Don't go for a big home run day one. Don't try to be okay, my goal is to get to 2,000 in profit for phase 1. I mean, yeah, that's the goal, but just tiptoe away. Every dollar you earn is additional buffer. There's no timeline. There's no more, monthly reset, fees or subscription fees or anything like that. Just don't rush. I mean, you do pay the data fee, I'll give you that. But guess what? If you're in this for the long run, just take your time. It's very easy to be excited about being funded. It's also very nervous sometimes, especially if it's your first time being funded. It's weird. I mean, I'm to be honest, it is weird. It's like, wow, I have like a lot of buying power here. There's a lot of potential. Don't let, just keep doing what you did in the evaluation that got you to the point where you passed. So take it easy. Use Rithmic's ability to set your own auto liquidate. It will prevent you from going on tilt and busting. You're in a trade, you swore this was going to go up 10 ticks, it starts going down, and you're like, screw it, it has to turn around. If you have an auto liquidate, you'll save yourself from ruin. So, additional recommendation based on my own strategy, I find that mentally I do a lot better if my very first trade is a winner. Now, of course, we all want winners, but I want that very, very first trade to be a winner. I never want to be digging out of a hole, basically. So I wait for a really good setup for my first trade, even if you just have to be super patient, because there's just such a huge, it's a weird thing. I mean, and this might just be me, but it builds up so much confidence having a winner your first trade, and it immediately gives you more buffer. Again, this is the accelerator, so the drawdown doesn't trail. So if you have a $200 winner even your first trade, guess what? Now instead of 625 buffer, you have 825. That's like a 30% increase. Like, that's a big deal. So do that. Really try to lock in a winner on your first trade. You're not in a hole, you don't have a smaller drawdown, etc. And then phase number 2 of the accelerator phrase, I was trying to think of what I would do different, but just do the same stuff. You're at 102,000. Your drawdown, static drawdown, gets moved to 100,100. You have a $2,000 drawdown. Do the exact same thing. Try to get a big winner, or not, I take that back. Don't even get a big winner. Just get a winner on your first trade. Use Rithmic's auto liquid, setting your own personal risk limits and auto liquidate, and just creep away, tiptoe away from that drawdown. And then once you build up a bit of a buffer, then you can, you have a bit more to work with. As far as the investor performance account, again, I've never done this. I don't know that I'd ever sign up for it. Anyways, nonetheless, it's so there's the static classic trailing drawdown. Just treat it as such. You have a $3,000 drawdown, but you really don't want to approach that. I would do a lot of the same things that I recommended for the accelerator account. Use Rithmic's ability to set your own stop loss. Like, don't dig yourself a big hole. Take your time and build your account. Your goal should, number one, be, because you have a 3,000 buffer base, or drawdown, let's call it, move that up to 100,000 and then start building that buffer up and above beyond that. So with the investor account, the withdrawals are fairly limited the first 4 months, which is the big reason why I don't like it. Knowing that you're not going to be withdrawing much money for over 4 months, there is zero rush. So take your time on that if you do go that route. That is basically it, guys. I hope that helped some of you. Here is my various contact stuff. Just, I wanted to point out, CanadianFuturesTrader.ca is my main site. I did buy an abbreviated version only because this is super long. So Canadian Futures Trader abbreviated.ca. If you see me post this link, this is me. It's not some weird person trying to pretend to be me. YouTube, you're obviously watching this, Canadian Futures Trader. Instagram, I did start an Instagram. I don't post much, or what I post is kind of half trading, half Canada stuff. It's nothing exciting, but feel free to follow me there. And then I put links below to anything that I mentioned. So like the LeeLoo investor account, accelerator account, kind of their facts explaining those. Link to LeeLoo if you want to sign up. Link to the video about Rithmic and how to set your own auto liquidate. And I think that is pretty much it. So thanks everybody for watching. Again, if you have any questions, feel free to either comment below or send me an email off the contact page on my website. I'm happy to try to help out the best I can. And I will leave you guys with that. So thanks everybody for watching, and I'll see you in the next video.